I think we're early. Or are we on time? Who's the timekeeper today? Trevor, I'll look at you. We're good to go? Good to go. Excellent. Well, ladies and gentlemen, shareholders of Farmlands, fellow directors, members of staff, it gives me great pleasure to take this thing off and welcome you to the 58th Annual General Meeting of the Farmlands Cooperative Society Limited. As directors and our staff, we both appreciate and support the patronage that you, as shareholders and customers, give to Farmlands. I welcome all of you that are joining online over there on the TV, on the camera, from around the country, enjoying our live stream service, as well as those that have made the effort to join us in person, adhering to level 2 conditions to participate and vote on the cooperative matters. So thank you for coming. I would like to introduce my fellow directors here today. Dawn Sangster from Otago, elected director.
Good afternoon, everyone.
Chris Dennison, North Otago, elected director. Gray Baldwin, South Waikato, elected director. Warren Parker, where's Warren? He's Rotorua, elected director. Julie Bonin, independent director from here in Canterbury. And we've got two directors who are joining us online, John Janae and Sjoerd Post, both independent directors, both currently in lockdown in Auckland, and have been that way for quite some time, if judging by the haircuts is anything to go by. We have one other elected director, Peter Ellis from the Hawke's Bay, who is an apology for today's AGM. I would also like to introduce our board observer, Will Clark from South Otago. Our key senior executives, the members of the Farmlands executive team, I'd like to introduce them today as well. We've got Tania Houghton, our Chief Executive Officer. We'll get the TV camera later. Kevin Cooney, our Chief Operating Officer. Ruth Newstub, Chief People Officer. Richard Wilkinson, our Chief Innovation and Digital Officer. Jess Strange, our Chief Customer Officer. John Campbell, our Chief Sales Officer. There you are, John, welcome. Mel Scrimmager, Director of Category. And James Stockton, our CFO. Okay, we now move on to the first item on the agenda, which is the apologies. I have no apologies. Do we have any apologies from the floor? David Peterson from Hawke's Bay. Excellent, okay. Any further apologies? Thanks, Jeff. All right, are you happy to move that we accept David's apology? All in favour say aye. Against? Carried. Thank you. We'll now move on to the Chair and the CFO and CEO reports. I'll start with the Chair's address. Following this, James will present the CFO report, and Kevin will come and talk as well about the year in review and give us the acting CEO's report, since he was doing that job for most of the time. Tania will then come forward and provide commentary on what our shareholders and customers can expect in the year ahead after that. Could I suggest that any questions are held over until Tania has completed her presentation? For those that are joining us online, we will collate feedback and respond at the conclusion of the reports. Due to time constraints, anything that we cannot address immediately following the reports, we will respond directly to you at the conclusion of the AGM. All right, Chair's address. Ina mana, ina reo, ina karanga, mahi o te wā. Tēnā koutou katoa. Ko Tapu Unuku te monga, ko Waia te awa, ko Ngāti Tiriti te iwi, no Pariroa Gōbai ao, ki whenua taroa kumupeni ahi mahi ana. Hei tia mana o te pori toku tunga mahi. Ko Rob Hewitt, toku ingoa. Nō reira, tēnā koutou, tēnā koutou, tēnā koutou katoa. My way of introducing myself, I'm a North Canterbury boy at heart, even though I farm in Otago these days. My mountain is Tapu Unuku, that you can see from all of North Canterbury and Marlborough. My river is Waia, and where I choose to at least keep home here is a place called Gōbai near Cheviot. So good afternoon, shareholders. It gives me some pleasure to report to you our company's 2021 result. We have recorded a net profit before tax and rebates of $8.1 million. This result has been built on total turnover of $2.7 billion and revenue of $1.1 billion, with the same factors that impacted our performance last year continuing to feature over the past 12 months. COVID-19 and challenging seasonal events, while mitigating circumstances, will continue to force the primary sector's hand in finding new ways to do business, alongside continued influence of changing legislation and environmental considerations. Generally, the board and I are happy enough with how Farmlands has responded to the challenges the business did face last year through swift decision-making and working with the wider sector to collaborate on delivering services and supplies to our customer base. As always, however, there remains a lot to be done. And it seems that as we look forward into the future, there is more to be done inside Farmlands than usual. The company is at a point of inflection. What was sufficient in the past for the way we did business is not likely to be sufficient in the future. 2021 has been a year of production, pandemic, persistence and protest. On many levels, New Zealand agriculture has not had as favourable indicators of pan-sector for a long time. Demand for our high-quality food and fibre globally is generally very strong, with high prices being received behind the farm gate. However, the headwinds facing our farmers and the sector are challenging. Supply chain difficulties in getting product to market, significant price increases for the products we consume in our day-to-day operations, notably fuel, fertiliser and fencing gear, although there are many other examples as well. These coexist alongside the difficulty in sourcing and securing labour to complete the tasks associated with producing the high-quality food and fibre that New Zealand is renowned for. The various environmental initiatives and regulations that the sector is being asked to deliver against, and the pushback from New Zealand's farmer base, indicate some farmer dissatisfaction with the pace and the scale of this change and the inherent uncertainty that this brings. The voice of rural New Zealand is loud as New Zealand's food and fibre industries are feeling the strain of relentless change being imposed upon it, be it from our urban cousins, our consumers domestically and globally, or our government. The role of our cooperative is to stay true to our values, while utilising our demonstrated reputation as a rural leader and goodwill we have generated throughout regional and central government to ensure our farmers and growers are heard. We were created to drive competition and be a disruptor to the market, but recently we have not always been good at publicising our proposition effectively. As a business, we prefer to focus on being present and constant, demonstrating by doing rather than flashy and flash in the pan. We have built for ourselves a strong working relationship with other sector participants, government departments and industry bodies to ensure a relevant rural viewpoint is being heard and valued in Wellington. While there's always more work that can be done, we are confident throughout this period of turbulence, Farmlands has your best interests at heart and has been vocal at the top table in a considered manner while doing so. This approach is for the betterment of our cooperative, our farmers and our sector. Consumers are changing. Not that many years ago, it would be unexpected that a consumer in a restaurant on the other side of the world would want to know anything a bit more than what country their red meat of choice came from, if they were even inquiring enough to do that. Today, these discerning consumers of our high-quality product also regularly inquire about its diet, grass or grain, its habitat, free range or feedlot, what treatments it's been given by the farmer over its lifetime and why, antibiotic-free, its carbon footprint, and increasingly, what production values its producer held, regen or conventional, what's your on-farm biodiversity like? Equally importantly to the consumers, did the animal have a happy life? These consumers are real. They exist in rapidly growing numbers, and they are the markets that offer our farmers the highest premiums if we deliver against the attributes that they seek out. Consumers are telling us that the right to farm is not a legislative right, it is a moral right. Consequently, our role at Farmlands has adapted from being only a rural supplies business to a primary sector partner that understands the opportunity and the challenge, and we provide the products and services required by our customers to deliver against these requirements. Like last year, the key to a profitable result for Farmlands has been about focusing on what we can control while adapting quickly to the variables, of which there have been many. As farmers, some of these we are used to. Seasonal pressures caused by drought and flood, and some we're having to get used to, like COVID-19 restrictions and supply chain disruptions. The well-known Chinese proverb, "May you live in interesting times," is known both as a blessing and a curse, and it's true that these times are indeed interesting in the New Zealand agri-sector. However, for all of the achievements of the past year, and there have been several, the reality is that Farmlands' performance warrants a pass mark in the view of the board and little more. Our increased debt level, brought about by increases in inventory to combat global supply chain delays in key product lines, has meant that the distribution of a bonus rebate this financial year has been deemed not in the best interest of the cooperative. The Board of Directors has put the financial stability of Farmlands first, and the ongoing impacts of COVID-19 means that the profit from this year is best utilised to cover our forward order position. New Zealand's current Delta situation hopefully justifies this decision to our shareholder base. The pressures emanating from climatic, legislative and supply chain issues means we are in a constant balancing act between fiscal responsibility and acting on opportunity. The one certainty we can agree on is that the Farmlands team has worked exceptionally hard over the past year to keep our stores open and our customers supplied. COVID Click and Collect, our e-commerce platform that was stood up in record time as another way to keep the doors open as an essential service, is just one example. This go the extra mile ethos is consistent across the country, although I'd like to reserve particular praise to the team in our 3 stores within the Auckland region, being Pukekohe, Helensville and Wellsford, and they're still doing it. This group has spent extensive time operating in a contactless pickup system and working within bubbles. We are grateful for their determination to keep us open in that region, and it's a positive reflection of the level of customer service that we want to provide. Striving to become the trusted partner of our shareholders and customers is being spearheaded by our new Chief Executive Officer, Tanya Houghton. At the onset of the latest Alert Level 4 back in August, doesn't it seem like a long time ago, Tanya joined the business 2 weeks earlier than scheduled because she couldn't go skiing, and she started to support Farmlands through that lockdown. The board acknowledges the milestone nature of Tanya's appointment, our first female CEO in our 59 years worth of existence. I'd like to note, however, Tanya got the role because she's the best person for the job, and being a female is a bonus. She has got the value set and the attributes that the board was looking for, and the board has empowered Tanya with the ability to install cultural change within the business. It's been identified at company and board level that there is a need to change things. Tanya's appointment has helped spearhead the latest chapter in Farmlands, and I'd like to welcome you to the team. I would like to acknowledge the contributions of our outgoing CEO, Pete Reedy, who led Farmlands for 5 years until April this year. I'd also like to publicly thank our Chief Financial Officer, Kevin Cooney, or our old Chief Financial Officer, Kevin Cooney, our Chief Operating Officer now, who stepped into the acting CEO role following Peter's departure. Kevin has performed admirably as acting CEO, and I am grateful for the strong presence he provided while leading our business. So thank you, Kevin. Farmlands is capable of more, and the board has provided clear guidance and expectation that the business needs to deliver strong, sustained results for our shareholders. The increasing uncertainty across the primary sector has not wavered. If anything, it's grown stronger over the past 12 months. With a solid platform to innovate from, our Braveheart platform, and a revised strategy that focuses on the now, we are confident that Farmlands can continue to grow and adapt. Quite frankly, it needs to grow and adapt in order to continue to earn the right every day to be your supplier of the products and services you need in your farming business. The board has approved the organisational change that provides clear direction and delivery targets for all parts of the business, which Tanya will speak to later on in the meeting. I would like to thank our shareholders for their ongoing support and commitment to your cooperative. We are here to grow your success, and we are here today for an exciting new chapter in our co-op. Thank you. I'd like to invite James Stockton now to give the CFO report.
Thank you, Chair. Tēnā koutou katoa, ko James Stockton, aho. Farmlands has posted a net profit before tax and rebate of $8.1 million for the financial year ended 30th of June 2021. While this is a 15% uplift on the prior year of $7 million, we consider it a pass mark only. We know we can do better. Coming out of a transition year in which Farmlands launched its Braveheart program, and with the business, like almost all of New Zealand, materially impacted by COVID-19 lockdown restrictions, Farmlands set itself ambitious targets for the FY21 financial year. It soon became apparent, however, that the long tail of COVID-19 would remain a factor and somewhat curbed our growth aspirations for the year. As the Chair mentioned, several one-off severe weather events also impacted our year. Despite these challenges, delivering an increase in profits was pleasing. A solid trading performance and effective cost management were the two main drivers. Our revenue of $1.1 billion was down marginally on last year by 2%, reflecting the twin impacts of product mix through our rural supplies business and reduced fuel prices. Turnover of $2.7 billion is up 1.2%. This is driven by our agency business, notably card with increased buying activity and through fertiliser volume growth. The reduced revenue saw our gross profit of $175 million down by 2% versus the prior year. However, this was offset by managing our operating expenses, which improved by $3 million, or $6.5 million before $3.5 million of additional depreciation that was incurred through a full year of depreciating our Braveheart program. Equity and members' interests were $136 million. This is an increase of $6 million on the previous year and was driven by our post-tax profit of $5.7 million. During the year, we also reached the milestone of 75,000 shareholders. I'm pleased to say that number continues to grow as more rural New Zealanders seek to benefit from our offering. Borrowings finished higher than last year, sitting at $117.5 million at the close of the financial year, up $3.8 million on the previous year. During the year, we refinanced debt incurred to fund our Braveheart program into a $30 million term facility, in effect removing it from our working capital facilities and giving us a more appropriate and prudent structure for our core debt. $3 million of this facility was repaid during the year under the agreed repayment schedule. The $90 million balance of our borrowings funds our day-to-day working capital requirements. That increased year on year as we secured more inventory to support shareholders and manage for ongoing supply chain disruption. Consequently, inventory levels were $10 million higher than last year and remain elevated versus prior years. We expect this to continue into the immediate future as supply chains remain constrained. I note that subsequent to year end, we have recently renewed all of our banking facilities with terms extended by an additional 5 years as part of our usual capital structure management program. These new facilities have been secured on pricing that reflects our commitment and our progress to our sustainability program. Farmlands continues to operate well within its banking covenants, and our equity ratio, including members' interests, currently sits at 23%, up from 22% in the previous year. I'll now ask Kevin Cooney, our Chief Operating Officer, to report on his time as Acting Chief Executive during the last financial year. Thank you.
Thank you, James. Tēnā koutou katoa, ko Kevin Cooney, aho. Good afternoon, everybody. Welcome. My name is Kevin Cooney. Thank you for joining us today. Our intention originally was to hold this meeting in Rotorua. COVID, of course, changed that like a number of things, and I think was somewhat symbolic for the disruption we've been dealing with as a business over the past 18 months. referred to in our Chair's address and in our CFO's address, and disruption that we continue to deal with. Disruption is, of course, not all bad. It forced us to look harder at the way we do things, question the assumptions we hold dear, bust some myths, and importantly, adapt and become more agile, all of these things to improve your experience of dealing with us, whether that be as a customer, supplier, or employee. Given those challenges and our ongoing transformation agenda, which I'll touch on further, delivering a 15% uplift on last year's bottom line was okay. But I concur with the CFO's pass-only rating. While we are capable of better, I believe also that this result does confirm that the work we are doing currently to strengthen our platform is starting to pay off. 3 big themes defined the year. The first was ongoing transformation of our business under our new system. Secondly, ongoing COVID disruption to our supply chain. And thirdly, acceleration of strategic initiatives to drive improved performance from our investment in Braveheart. On the first theme, as I noted in the annual report, adapting any business to working successfully on a new company-wide system is a major challenge. Implementing the system itself is only ever the first step. Processes, adjacent systems, behaviours, team structures, leadership styles, all of these things must also adapt. This is painstaking and difficult work. A common rule of thumb for any post-implementation system transformation is that it's generally a 2-year journey, and I think that's certainly the case for us. And a key insight has been that we must learn to walk before we run. Do less to achieve more. Embedding these company-wide changes throughout the year required a relentless focus on positive change. While this has entailed a huge learning for all of us as a team, I want to also acknowledge the frustration and fatigue for our staff. Your attitude, evident in the many examples of can-do, carried us through to a successful year, and I want to say thank you for that. Our financial year began with a company-wide reorganisation. This was aimed at reducing silos and aligning our group structure and activities more effectively around our shareholder. This saw creation of dedicated category, supply chain, and customer experience functions. These strengthened our ranging, sourcing and procurement and enabled improved insights into our shareholders' needs. There was also change at our helm. I stepped into the interim CEO role earlier this year after Peter Reedy departed in April, and we welcomed our new CEO, Tanya Houghton, in September. On the second theme, supply chain disruption remained an ongoing issue. I do expect this to continue for at least the next 18 months, and I see the next 3 to 6 months becoming potentially more acute as winter and fuel shortage-driven energy challenges in the Northern Hemisphere, in particular in China, driving factory closures, continue to challenge product availability. Port congestion, disrupted shipping into New Zealand, and the issues for container availability do remain. And while there is some evidence of easing, ongoing irregular arrivals of goods in the recent Auckland lockdown continue to impact domestic freight and logistics operations. I want to acknowledge our team who have worked tirelessly to stay ahead of these issues, and I particularly want to thank our suppliers who have stood alongside us to keep us informed, support our buying strategies and keep our shelves stocked. Potential unavailability of certain product lines and rising costs are unfortunate realities. Shipping costs have risen significantly, up 300% in some cases. Container demand is 50% higher than availability, and pricing for those containers has increased more than tenfold. To mitigate these constraints, we work directly with our suppliers to ensure supply. With increasing import lead times, in some instances, we also reassigned import containers to different ports to avoid congestion and ensure access. Turning to the third theme, while COVID-19 heavily impacted certain business lines in 2020, with our card and fuel businesses particularly still recovering from the first lockdowns, we began the year behind slightly behind the 8 ball as those businesses recovered. A positive consequence of this, though, was that it did accelerate our thinking on our strategic priorities, and I just wanted to touch on some of the achievements around those. Our Farmlands card was adapted through the course of the years so that it could be used online by shareholders with select card partners. And I'm pleased to say that we now have 17 partners who allow the Farmlands card to be used within their online environments. And that includes very large partners such as Noel Leeming. This is giving shareholders the ability to use their card increasingly anytime, anywhere within these digital channels, and we are aiming to grow that. I note that developing and growing that Farmlands card into a digital anytime, anywhere experience is a critical priority. Anytime, anywhere commerce and seamless digital transacting with convenience and great experience is becoming increasingly standard in terms of shareholder and customer expectations. Our e-commerce platform was redeveloped. It introduced a wider online product catalogue to shareholders and an improved user experience. We also developed a new online shareholder self-service, which we call My Farmlands. This was introduced through the course of the year with more than 30% of our shareholders having signed up digitally, and this gives them access to current and historic statements and the ability to redeem Choices rewards points and to access to a customised shopping experience with our online store. We also launched a new online card partner directory. This is essentially an online map that allows anyone with a Farmlands card to see the location of their nearest card partners online. People and safety was a critical focus throughout the year, and I am pleased to say that we've made good progress on building a safer and more engaged Farmlands team. Safety interactions doubled year on year, and these reinforce the importance of us talking about safety in the workplace, raising awareness and visibility on safety issues, and building a strong safety culture. New performance measures were introduced to provide improved visibility on our targets and to help us communicate our expectations of performance in the business and improve accountability. Accurate and consistent measurement against our people, our environment, our process and financial targets gave us this improved accountability throughout the year. I also want to touch on sustainability. This year was our 3rd year for integrated reporting. It was an important build on last year and continues our journey to being a sustainable company. This is an ongoing and increasingly critical part of who we are as a business and what we stand for. In terms of results, we reduced our total carbon emissions as an organisation by more than 12%, exceeding our target of 3%. This came about through a 40% reduction in air travel, reduced printing and use of paper, which saved us more than $200,000, reverting from paper to digital statements with more than 70% of our shareholders now receiving their statements by email only. This enabled us to pass our sustainability audit and to achieve our Toitū Carbon Reduce recertification. We continue to implement changes like these throughout our business and our store network consistent with this agenda. In closing, I would like to thank all of you, our shareholders, our suppliers, our card partners, and importantly, our Farmlands team, for your hard work, your resilience, and your support throughout the year, particularly during my time as acting CEO. We are proud of our role in our sector. We know that we don't have that as of right, and that we must continue always to earn your trust and your business. I believe strongly that last year was a positive and important step in setting us on the right path for supporting our world-class farming and growing industry. We have much more to do. I am proud of our team and our achievements so far, and I am confident we are up for that challenge. On that note, I would like to welcome our CEO, Tanya Houghton, and invite her to the stage to talk through her thoughts on our future direction and priorities. Thank you.
Mask. So, tēnā koutou katoa. Welcome to Te Whenua Tāroa, to Farmlands. So my first 12 weeks in the Farmlands team has been a whirlwind. While I don't think I've ever been so busy, I'm also pleased to say that I'm extremely happy that we made the move from Tamaki Makaurau to Otatahi when we did. So the opportunity to work with our team to develop and deliver the next stage of the Farmlands journey is truly exciting to me. My original plan for the first 3 months in our network was to spend time out in our network with our shareholders, our customers, our team and our suppliers. But COVID changed it all up, like it has done for all of us. And so instead, what it did do though, as I'm sure many of you have found, it creates other opportunities. So it created a window of time where I have actually spent time with our support team and worked alongside that team, firming up the delivery of our F22 plans, working on how we innovate and how we operate in a COVID-impacted world. We know we need to build a new strategy for a future Farmlands, one that leverages the investment in Braveheart while adapting our network and our operational approach to meet changing shareholder and customer and consumer needs. Ooh, that was a bit of excitement. As a shareholder from Masterton recently really aptly put it, and they were referring to Farmlands, they need to keep adjusting their offer to suit changing times. So what are we going to do with that? We're going to be working through a really robust strategy planning process to develop a future-focused plan for Farmlands. But while we're doing that over the next few months, we need to keep our mind on the key fact that we have a business to run and a job to do. So one of the first things we did as I joined the team was looked to make our F22 plan really clear and simple to understand. And I don't know about all of you, but I like simple. I can understand simple. So we created a plan on a page, shared it with the team, and it's in front of you now on the screen. And it focused on who we are and what we need to do. So who we are, it's around our approach to people, planet, purpose and profit. Mindful that delivering profit provides all of us with more options. Options to provide a return to shareholders, options to invest in growth areas, or in these very definitely challenged COVID times, to consider investment in inventory to protect our supply chain and your access to inputs. But what we need to do will determine our success for F22. You've heard a little bit other people mention people. So safe and engaged people is absolutely critical. It's number one. Our team deserve to come to work every day knowing that they're safe, that they're supported, that they're respected, and that they contribute to something completely unique. We regularly measure engagement levels across our business via quarterly surveys, which we call the Gathering. And I'm sure as shareholders, you'll all be really pleased to know that we're seeing positive lifts, particularly in the last few months. Our EMPS score, which is the score that we measure, is a measurement that indicates how likely a Farmlands team member is to recommend Farmlands as a place to work, has gone from -11 to +14 in the last 12 months, and particularly from 6 to 14 in the last 3 months. And that's been driven in part by the introduction of a new team discount program and also a targeted REM review across the business. So flowing on from safe and engaged people is customer experience. Customer experience that earns trusted partner status, ensuring that we're the trusted partner in our local rural communities, because better than anyone, we should know our customers, their challenges, and how they like to do business. Being focused on what works best for our farmers and growers is a key focus area for our team. And then delivering budget. Now that's a requirement. It enables us to invest, to grow, to be sustainable for the long term. We need to be performance focused, and we need to become operationally lean. So as you've heard from both James and Kevin, we're really leaning into Braveheart and how it supports efficiency in our cost of operation. This is going to be an ongoing process for us. When you invest in a platform like Braveheart, it isn't day one, end of story. It's a continual involvement and continuous improvement process. This year we're going to be building on more of those low-hanging fruits, and you may have already noticed that one part of that is we've already executed a resizing of the executive team. We're smaller, leaner, meaner, and ready to go. One of the other key parts is whakaora, or our innovation stream. We're using that data and tech that we now have access to build new ways to improve our service and delivery to customers. Our plan is to release innovation to you and into the market faster, test and learn, gain feedback, and then re-release. Whakaora is about innovating simpler, more effective, and more personal ways of doing business with you. Something as simple as sending an email to customers with their previous year's order, checking if it needs to be amended, and then pushing to confirm. And here's a few other examples. With a new executive team in place, we're now focusing on creating an environment our team want to be part of. Starting with leadership, everyday leadership behaviours for everyone, and that's for everyone in our business. We've got 4 key elements. Create. That's about clarifying the why, helping the team to understand the bigger picture, sharing more, being more transparent, more authentic, letting our team know the end game and how they contribute. Connect, building connections, generating purpose and belonging. Delivering results and being commercially focused. And grow, growing yourself, growing others, growing farmlands, growing our communities. We need to be resilient and embrace change, have a growth mindset, and empower our team and equip them to make great decisions and to do their jobs well. And probably as part of that, most importantly, for a lot of us, it's learning to get out of the way, remove barriers, provide support, and free things up. We're focused on being adaptable, open and transparent leadership, breaking down business units and silos, and ensuring a more collaborative approach across the entire Farmlands ecosystem. As we think about how Farmlands grows into the future, it's clear we need to grow our existing customers while also growing new customers. So here's some key factors that are influencing our thinking and planning. Our shareholder numbers make up 80% of the primary sector, and yet our share of the $18 billion sector spend, $18 billion sector spend, it's a big number that, is sitting at around 15%. So no question there's a lot of room for growth. This is clearly showing myself and the rest of the exec team that we're not achieving the share of wallet that we want and deserve. So we're obviously not hitting the mark quite right, and we need to adjust. We need to work out why we're not and what we need to do to ensure that we are. We also know that the land available to farm is shrinking. Total hectares in agri has been on a downward trend since the late 1980s, with available land reducing at a rate of around 1% per year. We're seeing continual shareholder growth, as James indicated. We've actually got more shareholders than there are farms, 50% more, in fact, confirming that our shareholder growth is actually being driven by the expanding lifestyle market. They now represent over 50% of our shareholder numbers. They're also contributing over 10% of revenue, and probably most importantly to our farmers and growers, these guys spend money and give us margin. So they average a margin of 15% versus the rest of business at 8%, and they're a really strong supporter of our card business. Lifestylers are an important part of Farmlands. They're an important part of the sales and margin mix, They contribute a lot from a volume and GM dollar perspective, and what we've all got to realise is they're helping to offset our total cost of operation, and they're growing. As farm size decreases to accommodate more lifestylers, at the other end of the spectrum, larger entities and producer groups are growing in share. They're consolidating farms previously held in family partnerships, and they're focused often, as Rob said, on the premium consumer. These larger groups now dominate employment in the New Zealand agri sector. Dairy, arable, forestry and sheep and beef still remain our main source of sales. The good news is that there's plenty of annualised spend in these groups that we at Farmlands are not yet seeing. So we need to reset ourselves to gain a greater share of all of these customer segments, ensuring growth, increased volumes, buying power and profitability, creating a positive loop that will then enable us to return more to our shareholders. So we're going to do this with a laser focus on being more efficient, especially over the next 12 months, by buying, supplying and selling better. But it does mean we need to do things differently. We need to change our operational model. High service and low margin is not a sustainable combination. It will mean change. We have to look for a start at how we provide products and range. To illustrate this, it's worth understanding that at the moment we have stock invested in over 32,000 active SKUs or unique product codes, while less than 2,000 of these drive 80% of our sales. In my conversations with shareholders, it's clear that you understand that our business model is not where it needs to be. As is always the case, what was hugely successful in the past won't necessarily be successful for the future. And standing still or maintaining the status quo just sends you backwards. So we've invested heavily in technology. Now we need to use it. We've got data and we need to make the most of it. We know we need to make change and fast. So we're taking the opportunity to think differently around our delivery model, including what our branch environments might look like. What role does a branch play? Are distribution centres the right way forward? What does a new store look like, and how do they show our customers our entire ecosystem? How do we play out the office services and supplies that we can provide across our portfolio? What role do e-com and click and collect have, as well as how do we use digital to expand our position and our access on farm and in branch? So my first 12 weeks has confirmed for me what my recruitment research indicated, because I did do a lot of DD before coming on board. Farmlands has the team. It's in an amazing sector. The passion is throughout our team, throughout our business, throughout our sector. It's invested in building the platform. Now comes the hard work, the mahi we really need to do, to provide you with a result that reflects your investment. But we can't do it alone. We are a collective team. We need your support. So we'll develop safe and engaged people. We will work really hard to create an unbeatable customer experience. We'll deliver the results and we will innovate. But in return, we want more of your spend, more of your support, and all of that will lead to a better return for you. Tēnā koutou katoa.
Thanks, Tanya, and thanks to James and Kevin earlier on. I think that's been a really useful oversight of what has been a pretty challenging year and the look forward. Look, before we get on to the order of business today, there's just one more person I'd like you to hear from, and that's Will Clark. He's our board observer. He's been with us for just a shade over a year to observe how things go on a real board, I guess. There's plenty of them, but we're delighted to have you here. So, Will, the floor's yours.
Good afternoon. My name's Will Clark and I'm a dairy and beef farmer from Clinton in South Otago. For the past 18 months, I've been the board observer on the Farmlands board, and during this time it's given me an excellent exposure to governance. Prior to this, my governance experience was limited to various community organisations, and I completed To the Core and To the Core Extension, which are governance courses jointly run by Farmlands and Silver Fern Farms. As someone with governance aspirations, one of the challenges we face is how to get some experience so we can make a valuable contribution if we're appointed or elected to a role. In effect, how do we get that first step? Back in 2019, I was looking for ways that I could start this journey when I saw the board observer role advertised. At this time, I was looking for a way to gain experience in a large business and to see what actually happens inside the boardroom of a commercial organisation. To firstly, see what good governance looks like, and secondly, to see whether governance was a career path that I wanted to explore. Pleasingly and unsurprisingly, my expectations were more than met. The Farmlands board, management and staff have been very forthcoming with their time by coaching and guiding me through my 18-month tenure. After each meeting, I have had the opportunity to have a follow-up session with a director to discuss the meeting, the key points I saw, what they saw, and then they would usually have some focus areas for me. What surprised me was the time commitment required and the time that was needed for me to spend outside of our own farming business and away from our young family. Last year, I was told by one of the directors that to have a successful governance career, your own business needs to be in order and that your partner needs to be fully supportive of you. I'm very grateful to my wife Stacey for the support she has provided me and our excellent on-farm team, which has made it possible for me to meet the commitments this role commands. At home, I'm the Deputy Chair of Clutha Development, a trustee on the Clutha Foundation, and a committee member for the Pomahaka Water Care Group and the South Otago Era Club. The skills I've learned over the past 18 months is enabling me to make a much stronger contribution to these organisations than I was previously. From here, I'm excited to continue my governance journey. Next year, I'll be completing the Fonterra Governance Development Program, and I'll look at opportunities as they present themselves where I think I'll be able to make a strong contribution. I'd like to thank the Farmlands board, management and staff for making this opportunity available and supporting and guiding me through it. I wish Tanya and the team all the very best, and I look forward to being able to make a contribution to Farmlands in a formal governance role in the future. Thank you.
Thanks, Will. Just casting your mind back over all of the reports that's been submitted to you in the last half hour or so, are there any questions? While I'm waiting for the audience to think up something interesting, Trevor, is there anything from online? Okay, no pressure. Look, that's good. I'm sure we will have time for more questions afterwards. I think we might as well move into the formal part of the business and the AGM. So you will have seen that we've got copies of the minutes from the AGM held on the 19th November 2020. Are there any alterations to this record? If not, I move to approve the minutes of the Farmlands Annual General Meeting held on the 19th of November 2020. Can I have a seconder, please? Thanks, Dawn. Dawn Sangster. All of those in favour, please say aye. 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 Against? Done. Carried. Okay, the annual report and financial statements. I'm going to take them as read. You've all had the opportunity to pick up a copy off the seat in front of you or download it on our online PDF. Are there any questions relating to the annual report and the financial statements for the year ending 30 June 2021? Must be very clear. Excellent. If there are no questions, so there's anything online, Trevor? All good, thank you. I'd like to formally move the adoption of the annual report and the financial statements for the year ended 30 June 2021. Can I have a seconder for that motion, please? Chris Dennison. All in favour, please say aye. Against? Carried. The next item is the appointment of auditors. It is a recommendation of the Board of Directors that this year we make a change of auditor for this upcoming financial year. The resolution is to appoint Deloitte as our auditor, replacing PricewaterhouseCoopers. I would like to thank PwC for their support of Farmlands as auditors for a number of years. Would anybody like to speak to this resolution? Okay, anything online, Trevor? Okay, would somebody like to move that this resolution be approved? The resolution is that Deloitte be appointed as the external auditor of Farmlands to replace PricewaterhouseCoopers, to hold office from the conclusion of this annual general meeting until the conclusion of the next annual general meeting. Can I have somebody move that, please? Gray Baldwin, thank you very much, and we'll need a seconder for that, please. Thanks, Warren. Warren Parker. All in favour, please say aye. Against? Carried. Now we're going at a gallop. Director elections. Before we move on to general business, I would like to discuss the shareholder director election process for this year. This year, we had director elections held in both of the islands, and the voting closed on the 10th of November. It's worth noting that the turnout for the voting was underwhelming for a business of our size. Single-digit shareholders. It was, we can do better, we need to do better, this is our company, we all should be having a say in how it is governed and exercising our democratic right to vote. I think there's lots of opportunities that we can take for communication out to our shareholders to improve this for next year, but I would just like to reiterate and say that I cannot emphasise enough the importance of this process and having your say. After all, this company is owned by you.
All of us can vote.
No, that's correct. Quite clearly stated. Minimum shareholding of 500 shares. There were two candidates for each island. In the North Island, incumbent Gray Baldwin retired by rotation and was seeking re-election, standing against Alistair Flatt. In the South Island, Dawn Sangster retired by rotation and was also seeking re-election, standing against Kim Strawbridge. And now I'd like to see the director election results up on the... we got them for the slide? It is my great pleasure to be able to say that both Gray and Dawn have been returned to the board with quite significant margins. Congratulations to both of you. It's going to be a pleasure working with you again for the next 3 years, so well done. And I would just like to thank Alistair and Kim for putting their name in the hat. This is a democratic process. We do need our shareholders to be engaged and part of it. So thank you for doing that, and we look forward to other potential governors of the future, as you just heard of one here from Will. We look forward to engaging with you in that space in the near future. Right, we'll move on to general business. The Secretary has not received any notice of other official business, but we now welcome members to raise any other issues that they wish to discuss. I'll handle the governance question, and if there's any other operational stuff, we'll hand that over to the various members of the Farmlands Executive. So, are there any questions for general business? Yes, could you please just state your name, please?
Yep. So Lou Bryant, Christchurch.
Sorry, Lou, yes, if you could use the mic so the people online can hear. Yep.
Thank you, Lou Bryant, Christchurch. Do you ever envisage a day when dividends will start again?
Yes, we absolutely. I mean, that's part of the fundamental reason that we want shareholders to join this company, is that they can enjoy the benefits of belonging. And part of that process is not only the competitive buying prices that we hope to offer and are marked against every day, but also the profits from the business. You know, subject to reinvesting back into the business and making sure that the business is not going to be detrimentally affected by paying it out. And this year, as I mentioned in my address, and I think both James and Kevin referred to it as well, the board backed management's view, given supply chain uncertainties, the need to have stock levels here to service our shareholders' requirements for products, given the uncertain supply chain that we saw for imported products coming into the country, and indeed still see today. So effectively what that meant is the money that we could have potentially paid out as a dividend, we have put back into stock, so that we've got product here available for our shareholders to buy when they need it. Not across the whole board, but some key competitive lines. So, but your question's valid and absolutely part of what we aspire to do.
But nothing in the... you can't foresee anything? Given that we haven't had a dividend since Farmlands took over, 2014, 2013?
No, that's not quite true. We haven't paid, Stocky, you might want to confirm, but I think for the last 3 years we haven't paid a dividend, including this one. Is that correct? Yes. So we certainly have paid dividends post-merger, and it's the intention to continue to do so when profitability allows. But quite clearly, you know, we've got to make sure that the business is in a position to be able to afford doing that and meet all our obligations going forward. Any other questions? Any questions online, Trevor? Good Lord, I expected more than that. Okay, that's all right. There will be opportunity for more questions as we, I think the coffee van's outside for a cup of tea or coffee later on. We'll move on, being no further questions, to the prize draw. This is part of the tradition around Farmlands. We have a prize draw. I have the envelope here. It's for a $1,000 voucher to be spent, funnily enough, in a Farmland store. All shareholders that registered their attendance today are eligible for the prize, and I get the dubious pleasure of drawing one out, and I can tell you that you two, being my parents, are not going to be eligible. Thank you. It is my great pleasure. I hope Graham Trost, are you in the room? Where are you, Graham? Come on up. Well done, Graham. That was not a bad sort of an effort.
Very unexpected.
You're most welcome. Okay, look, that brings us to the close of the meeting. On behalf of the Board of Directors, I would like to thank you for your attendance here today, both in person and online. We do appreciate you dialling in. Trevor, just for the audience here, do we know how many people we've got online at the moment? Just 4? Okay, I thought we were going to have a damn sight more than that. Okay, I would like to thank you for turning up today. I would take the opportunity, we can certainly continue these conversations over a cup of coffee outside. I declare the meeting officially closed. Thank you very much.